What up, Hyperchange? Welcome to another episode. Today we're going to be talking about whether Walmart will be able to beat Amazon. The company just reported its fiscal 2018 earnings report today. The stock is down about 9% to $95 per share. So first, we're going to go through the financial results quickly, see what's up with that, and then go into higher level discussion about whether they'll be able to fend off Amazon. Let's get right into it. So Walmart reported, a solid quarter, not too bad in terms of revenue growth. Revenue growth was up about 3% in the quarter to $136 billion from $131 billion the same period a year ago. But what the market is so fed up about with Walmart's earnings is that the operating income fell from $6.2 billion to $4.5 billion, a decline of 28% year over year. Very clear that Walmart is getting less and less profitable as they try and compete with Amazon. Running an online business is just different than running the stores that Walmart does, and it's looking like it's not as profitable as Walmart's old business. So as e-commerce becomes bigger and bigger, their margins are shrinking. If we look at an annual basis, Walmart did surpass $500 billion in revenue for the first time ever in the company's history. So that was a great sign. It was up about 3% from the year ago period. But once again, operating income, the company's actually earnings are falling despite the fact that revenue is growing. Amazon is hurting Walmart's business, and we are seeing it in the results. And that is why earnings fell from $22.8 billion to $20.4 billion. The market is justifiably concerned here. If we take a look back, this isn't a trend that's new. They've been able to steadily grow revenue for, the past 5 years, going from about $469 billion to over $500 billion. But in terms of profitability, they've been on a steady downward trend, going from $27.7 billion down to $20.4 billion in fiscal 18. So just a consistently declining operating income line for Walmart, and I think this is getting investors pretty nervous. One of the most important pieces of Walmart business that we were looking at this quarter is their e-commerce sales. And as they try and compete with Amazon and morph into more of a hybrid retailer that has stores but also is huge online, they're really focused on growing this e-commerce revenue. Sales from their e-commerce business were up 44% in fiscal 2018 to $11.5 billion, but a lot of this was helped by a one-time bump because they bought Jet.com. So not all of this growth is organic. In fact, they were growing e-commerce sales at 50% year over year in Q3, but now in Q4, when they had the tougher comp because they acquired Jet, more of organic growth, the growth rate slowed down to 23%. So it's unclear if Walmart will be able to sustain that elevated 44% growth rate now that they don't have the bump from Jet.com. But in their guidance, they did stay really strong and said they expect to grow e-commerce sales by about 40% in fiscal 2019. So, that implies some acceleration of the 23% that we saw in Q4. Interesting to see how this business line evolves for Walmart, but the problem is that it's making them less profitable. A direct quote from the conference call was that gross margin rate declined 50 basis points in the quarter. This is from Walmart US, due primarily to price investments, higher transportation expenses, and mixed effects from our growing e-commerce business. So, it's clear that e-commerce is making Walmart less profitable. Another interesting thing to note is Walmart returned $14.4 billion to shareholders in fiscal 2018. This was through buybacks and $6 billion worth of dividends that they paid out to shareholders. To put things in perspective, Amazon only generated about $4.1 billion in entire operating profits for the full year of 2017. So Walmart's paying 3 to 4 times as much as Amazon's entire profit just to shareholders, let alone money that goes back to itself. So, this is a huge Achilles heel for Walmart. Their operating income this year was only about $20.4 billion. $14.4 billion out of that returning to shareholders is 60 or 70%. To give you guys a quick valuation of Walmart after the big earnings hit today, there are about 3 billion shares outstanding at $95 per share. That's a $385 billion market cap. At a $385 billion market cap divided by $500 billion in sales, we're looking at a price sales ratio of 0.77x with about $20.4 billion operating income. We're looking at an 18.9 price EBIT ratio. Walmart's price earnings ratio right about in line with the markets here, about 18 or 19x. Seems like a pretty fair price for a business that's steady, but Walmart's operating income is actually declining. If this trend continues and Walmart's stock stays flat, it's actually getting more and more expensive as you own it because their earnings are going down. And I think this is part of the discrepancy discrepancy in Amazon's valuation versus Walmart's. To put things in context, Walmart being worth $385 billion is only worth about half of Amazon, which is now worth $715 billion. This is despite the fact that Walmart had $500 billion in sales in its most recent year. Amazon only had $178 billion. So Walmart has a 0.77 price sales ratio, where Amazon has a 4x price sales ratio. Amazon is about 6 times more expensive for every dollar in revenue. Now, why might this be? Next year, Walmart is only expected to grow sales at about 2%. Amazon is projected to grow sales at about 31%. So Amazon is growing more than 10 times faster than Walmart, and that is a big reason the company is being valued so much higher. And I thought it was interesting to note, though, that going forward, Walmart produced $4.42 of adjusted EPS in fiscal 2018, and they're projecting $4.75 to $5 in adjusted EPS for fiscal 19. So they're saying that earnings are going to grow, but I don't know if this is actually operating income. I don't know if they're going to pull some accounting shenanigans, but it'll be really interesting to see if Walmart can reverse this declining trend in operating profits this year. I'm going to be following this super closely, and although I think Amazon is competing with them heavily, I also think there's not much overlap between Whole Foods geographic locations and between the geographic locations of Walmart stores. So for the time being, I actually see Walmart and Amazon both winning and continuing to crush out these smaller players who don't have the scale of Walmart or Amazon and just will get outcompeted on price. I really still think we haven't even seen the start of the Amazon versus Walmart battle. Walmart is working on technologies like Amazon Go. They have this incubator that's headed up by the guy who started Jet.com, where they're testing all these new sort of innovative technologies, basically trying to keep up with Amazon. So it's going to be really interesting to see how this evolves. But my biggest guess here with Walmart is that if they can't figure out a way to turn around their operating income, they're going to have to stop returning as much money to shareholders. Them announcing they're stopping to buy back shares or they're not going to be able to grow their dividend is going to cause a mega hit to the share price. I don't think that's coming maybe this year, but next year that could be on the horizon unless Walmart really is able to turn a corner. Walmart is at a very interesting point in its business model. They're still profitable, they're still a dominant company, but there is this looming problem on the horizon of Amazon is coming, and Amazon is a financial arbitrage machine. I made an episode about this. Amazon is not required to make a profit or pay a dividend like Walmart. That means they can sell the same products for cheaper, and I already think Amazon is better at selling products in terms of efficiency, in terms of leveraging software and data and having that ingrained in their corporate culture, which I think is also an edge. If I was Walmart, I would be starting to tell my investors that we are going to have to start dramatically cutting back profitability. We are going to go into growth mode. We need to transform the company to compete and be a real digital retailer in the 21st century. Otherwise, Amazon is going to beat us to it and put us out of business. But that is a really tricky narrative to tell shareholders who don't want to see their dividend checks get cut. Anyway, this is the Walmart-Amazon battle. Still too early to tell who's going to win, but we're going to be following it closely here on Hyperchange. I'll see you guys next time. Let me know what you think in the comments. Peace.